Welcome back to Trading 360. I'm Nicole Petalides, live on the floor of the New York Stock Exchange. Time for the big three. 3 stocks, 3 charts, 3 trades. Van Lichtenstein will take us through the charts. Here to take us through the trades, Alan Nuckman, Chief Market Strategist at BullseyeOption.com. Good morning to you both. Alan, before we get to your trades of the day, how are you feeling about the range in the S&P 500? The NASDAQ had a record high yesterday. What are you telling and thinking about? I know you look at the charts, but how are you feeling?
Well, I'm feeling good that the fact that we're testing this top. We're not seeing a breakout yet. And again, it's not about what the catalyst is. I don't care. It's the price action. And the stock signals have been strong in 2023. If you haven't been long, you've been wrong.
Yeah, that's exactly right. And now, what about DuPont? As you look at DuPont today, what are you thinking? And when you look at this chart, I know you're setting up a trade for us today. How are you feeling about DuPont?
Well, I'm looking at the Dow, and the Dow hasn't really participated, so far on the new year. I guess it's not so much of a new year anymore. So the Dow is pretty stuck, whereas the S&P is up nearly 10%. So this is a stock that I see positive bullish buying, leverage buying, which is a sign of intelligence there. It's filled the gap here in the near term, and the big picture has been between 60 and 80 for 6 months. So this 70 is an important midpoint. If it can pop through there, then it's back to the top of the range. And then if it breaks out of that range, then it's back to 100. Now, we were at 100 back in 2019. So the way to play, again, was in the money option. I'm looking at the DuPont October 60 call. Again, 60 is the bottom edge of this range for the last 6 months. It's trading for about 10. It's $7 or $8 in the money. It's got 5 months and a move up to 80. This option more than doubles.
Okay, so that's the plan there. When we see it today, 67 and change, the bullish call moving, on its way up to 80 maybe. Ben, what are you thinking there?
Let me just say, Nicole, I'm happy to hear that Alan's talking about the bigger picture on DD rather than the more intermediate time frame, which is signaling a bit of weakness here, because in the 3 examples he's going to talk about today, I'm going to lean and give the benefit of the doubt to the longer term trends that we're seeing. Not necessarily in this instance, as you can see on the hourly, a shorter term trend, which, and again, DuPont, we've seen it to the downside. And Alan's talking about a bit of a range, looking at the lower extreme around that $60 level. I've got my eye on that as well. But let's first and foremost just identify migration of value to the downside and how we're working our way off recent lows around 62.80. 60-minute time frame shows 4 pretty well-defined areas of consolidation, and you can see we're still holding below this key area. Again, 70 is going to be the first big hurdle for the bulls to get up above in terms of that longer-term bullish narrative. We're still below that, but you can see we didn't spend a lot of time down here, and we're now starting to work our way towards that key hurdle. Let's move away from this intraday hourly look because I want to show you what's going on with the daily. This is what I'm talking about, that longer term trend to the upside. This chart goes all the way back to July of last year. This is what Alan's talking about, the lower extreme of the range that we've been in over the last 6 months or so. Again, you can see he's got his eye on the $70 level as well. It sounds like, let me just identify some of the areas of consolidation I'm watching on this daily. 72 is the key area. If we can get up above on that longer term, I think it'd be important and open up a door for a retest of the upper extreme. And again, I'm just looking at these longer term trends here that we've got. In this instance, a weekly chart, we're going all the way back to, we're talking 2018. Just really my eye was attracted to 2 areas of consolidation, but you can see this is a stock that's no stranger, aside from the pandemic spike, which threw things out of whack, no question, taking out 45, but briefly, you can see that this is a stock that's found comfort around this 70, 75 area. So I'm not surprised to see Alan look to potentially see that short-term trend of the downside reverse in line with that longer-term trend of the upside and revert back to that key area again, 70, 75, an area I'm watching here on this weekly.
Right, understood. And so didn't spend very much time at that lower level there, Alan. And when we think about the dogs of the Dow, and often the dogs of the Dow turn out to be the winners, right? Final thoughts here.
Yeah, that's some of the logic, but it was nice to see that it tested, made a new low, and then reversed itself and filled that gap very quickly. That's a momentum shift. And I'll take maybe from Ben, and we both agree a pop above 70 gets this thing started for real.
All right. Coming up next at $30 and change, we're looking at the Brazil ETF. Is this something that you watch closely? Why today?
Well, I know in the past we talked about the EWZ, which is the Emerging Markets ETF. Now, if you dial in on Brazil, I'm a big fan of Brazil, we did a play the other day in PAGS, Pagliosura. I didn't even know what it's a fintech digital company. I like the chart setup, and a lot of these stocks in Brazil are set up very, very nicely. So we're seeing in the ETF itself, we're seeing bullish divergence, meaning it made new lows but not new highs and implied volatility back in March. We're seeing a triple bottom. That's very impressive here. We've been between 25 and 30 for 6 months, 25 and 35 for a year. So 30 is a critical level. A pop here, solidly above this 30 gets it back to that range top at 35 very quickly. So what I'm looking for here is a December option. The volatility is half of what it was last October. So the options are that much cheaper, so you can buy more time. A December option has 6 months of time. That 25 call, again, that's the bottom. It's trading about, it's 5 and change, 5.75 or so. It's $5 in the money. So if we get to the top edge of that range at 35, then you're going to look to see this option gain nearly 100%. So again, it's a play on dollar renewed weakness after we've seen a little bit of a pause in this dollar action here in the last month or so.
All right, makes sense. I mean, you have talked about the EWZ before. Ben, your thoughts on this chart?
Well, I do agree with Alan in terms of that key level being 30, in terms of the more intermediate, more granular time frame. I've got my eye, as I mentioned at the top of the hit, though, Nicole, in the bigger picture, which is a downtrend here. Let's begin with the uptrend, though. As I mentioned, again, much like our last example, somewhat counter-trend to what we're seeing on the bigger picture, but well-defined here, very well-defined, and also teetering around that level Alan just brought to our attention, around 30. I've got my eye on these 4 areas of consolidation, but first and foremost, let's go back to the left side of the screen, the bottom left here, because you can see how a bit of a double bottom and that area consolidation around 2765 is where we saw liftoff a couple weeks ago. We balanced out around, we'll call it 2875. And I don't want to split hairs because, again, we're talking about a more granular time frame. I identified 2980. Alan, what's 20 cents amongst friends, right? Let's clear this out, though, and move on into, as you can see, the 4-hour time frame. Now, this one shows a little bit more of what I've been talking about, that longer-term trend to the downside. 4-hour chart here also shows a key area of consolidation. We're kind of testing the upper extreme of that right now. As you can see, again, 30-50 would be key, potentially reversing this trend in the longer term. So, again, I think 30 is very significant. Alan identified that. Now, in terms of kind of tipping the scales back lower, 2850 would open up the door for a retest of the lower extreme we saw earlier this spring down around 25. Let's move away further into, I've got a daily time frame here, and again, kind of talking about giving the benefit of the doubt to the longer term trend that's at play here. I see a very well-defined double top and an area of consolidation that formed up around 43.44. Well-defined breakdown into the fall of 2021 and since the beginning of 2022, basically sideways around this $32 level. So again, the 30 area, very key, depending on which time frame you're talking about. You can get a little bit more granular, more specific and hone in on that area. But either way, look, in the middle of this range that we've been in over 2 years now, basically. So it really speaks to the importance thereof. I'm also focused on that longer term trend to the downside, giving the benefit of the doubt to the bears still.
Right, right. And that gets frustrating when you're stuck in a range for a few months and then a year and then 2 years. That gets tough, Alan. People don't necessarily love that, but you're making your call here, right?
Well, actually, I do. I like that consolidation because it's building energy. The longer something goes sideways, typically the bigger breakout. Now, you're not saying which way it's going to break, but looking at that triple bottom and being long from 25 with a December option 6 months at a time, I'm pretty comfortable with that position for the long term to be there for that attempt to pop. And all I needed to do is get back to that range top at 35. And again, you're looking at 100% gain in the right option.
All right, last but not least, lemonade, not the cool, refreshing drink. We're looking at the world of insurance, finance, things like that. Tell us a little bit about this one. Why is it on your radar?
Well, this one encapsulates both indicators that I've used in the last 2 trades here. So it's got the leverage buying, which is the intelligent money flowing into it, And so you're seeing that, and you're also seeing that bullish divergence, meaning it made new lows but not new highs in implied volatility. So both of my signals are working for us here, and this is a stock that's obviously had a big drop. It's been between 10 and 30 for the last year, and between 10 and 20 for the last 6 months. So the consolidation here, it's above the midpoint of the last 6 months range, 15, which is an important signal here. So a pop above 20 is a crucial number here. Should get this moving. The way to play is a December $15 call. It's trading for about $5.50. It's got 6 months of time and a 75 delta, and it'll provide a nice payoff on a modest move if it pops above that 20 level.
And if you have that move, this is a win. Ben, take a look at the chart and the technicals of Lemonade.
Well, Nicole, when I look at this one, it looks like investors have tried to turn lemons into lemonade. On the short term, they're achieving their goal, but on the long term, I think they're still looking a little bit puckered up considering some of the declines we've seen. Taking a look first and foremost at just the move up this last week, I should say, Wednesday, 1462, almost a $2 advance up to 1843. Again, a significant move here and a very well-defined trend, bottom left to top right. But this is a 15-minute candle chart, right? So let's not get too married to the more granular time frame. 15, 16, 18, the areas of consolidation. You can see that well-defined initiative phase. So this is a pretty good example of that transition between the two phases. But again, we're only looking at a 15-minute time frame, so this only provides us a very little bit of information. So let's step back, right? And you can see here a bit of a different story when we look at the bigger picture, longer-term trend in terms of what's been playing out here on the 4-hour. A couple different scenarios I've got my eye on. You've got a situation where we've seen value move lower. If you want to call this a value area, it was short-lived if so. If so, though, again, we're starting to break out to the upside. This would not necessarily be supportive of that longer-term narrative of the downside. It'd be more supportive of a bit of a trend reversal, but I'm kind of, again, sticking with this longer-term trend. I'm going to show you why on the weekly in a second. I'm sort of giving the benefit of the doubt to the bears here, thinking this is more just a test of an upper extreme, and we're still balancing around 15. Let me show you why I'm giving the benefit of the doubt to the longer-term bears here. This chart says it all, Nicole. This is the highs that we saw end of 2020, back in 2021, up 188.30. Look at these areas of consolidation, and then look at this. I mean, get a fine-tooth comb out to really separate these two, but you can see 23.15. As long as we're below 23, this stock's under pressure. It's in a longer-term trend to the downside. I don't care what the 15-minute says.
You know what's interesting? Thank you for that, Ben. JP Morgan analysts saying that investors should put their money in gold and cash as the rally in stocks won't last. We're also hearing from Oppenheimer that the Fed will raise in June 25 basis points. Alan, quick thought.
The market knows all this. We're here where we are. Like I said, every signal has been strong. And there's also, just to let you know, there's also a 97% chance, and that's jumped from yesterday. It was only 90%. 97% chance that there will be a rate cut by December. So, the markets are forward-looking. I like this momentum. I don't fight momentum. It's pure and simple. And to try and pick this turn and say that something can't happen, that's not what I do.
What do you think about some of these calls here from JP Morgan and Oppenheimer? We're going to wrap it up right there. Thank you both very much. Alan Nuckman, BullseyeOption.com, Ben Lichtenstein. Thank you both for the big three today. Appreciate it. All right, coming up next, we have a spotlight on Bloom Energy. The president CFO will join me right here on the floor of the New York Stock Exchange. In fact, the company's kicking off its Investor Day today. Take a look at renewable energy and the outlook.